Good morning. I'm Adi Shvaig, and I work at the office of the Deputy Governor of Bank of Israel. Welcome. More than 90% of the world's central banks are considering the possibility of issuing a central bank digital currency, otherwise known as a CBDC. So far, only a few central banks have done so, and many central banks are still undecided. But to be ready for the future, you must prepare today. Preparing for a potential launch of a CBDC means policy analysis, business consideration, legal evaluation, and of course, a deep technological exploration. Today's conference is named The Future of CBDCs, and we will get a first-hand look at how the exploration and design of CBDCs actually happens. Project Sela is a joint collaboration between the Bank of Israel, the Hong Kong Monetary Authority, and the Bank for International Settlements Innovation Hub. The name Sela, for those of you who don't know, originated in an ancient Hebrew silver coin used in the land of Israel over 2,000 years ago. Sela is also, as most of this audience already know, the Hebrew word for rock. This is also a reference to Project Lion Rock, the HKMA's first CBDC study, named after a famous mountain in Hong Kong. The project name Sela, therefore, represents the historical richness of money and the unique and innovative collaboration between the Bank of Israel and the Hong Kong Monetary Authority. Today, the Sela Report is being released with all the details of the project and its findings, and in a few minutes, we will give you an overview of the project. After that, we will also give a short demo to provide you all with first-hand insight into the Sela infrastructure. So get your phones ready and stay tuned. Project Sela was also supported by private sector vendors FIS and M10, who built the technical product, Checkpoint, who provide the cybersecurity analysis, and Clifford Chance, who performed the legal evaluation of the proof of concept. In addition to Project Sela, each of these institutions is doing interesting work in this field that you can hear more about in the second part of the day. To open the conference, I'm delighted to invite the Deputy Governor of Bank of Israel and Chair of the bank's CBDC Steering Committee, Mr. Andrew Abir.
Thank you, Adi. I'm very pleased to make the opening comments at this event, which has been organized to share with you some of the findings of Project Sela, one of two international proof of concepts, POCs, the Bank of Israel has been involved in over the last year to explore certain attributes for a central bank digital currency. I would first like to commend the international cooperation involved in this project and its importance for the Bank of Israel's CBDC investigations. I particularly want to thank our international partners, the BIS Innovation Hub, which is a global leader in the technological explorations of CBDCs, and working with you has been extremely beneficial for us. Thank you, Benedict, for all that you did to enable this. The Hong Kong Monetary Authority has been running CBDC experiments several years before we entered in the field, and we were lucky to work together with your team, Howard, and learn together. I'd also commend the important role of the project vendors, FIS, M10, Clifford Chance, and of course, Checkpoint. I would like to make, first of all, some initial comments on why we're exploring the possibility of introducing a retail digital shekel. At the heart of the discussion on CBDCs is the question of whether we need a retail digital fiat currency. Today we have two types of central bank money: wholesale digital shekels in the form of commercial bank deposits at the central bank, and physical fiat currency in the form of shekel banknotes and coins. The relationship between the nation state and its fiat currency is a unique one, aimed at providing a stable means of payment and store of value for the nation's economy. Nation states are committed to ensuring the stability of their fiat currencies and the systems on which payments are made using the fiat currency because of the central role that money and payment systems play in the functioning of the economy. This commitment is implemented through monetary policy aimed at maintaining the purchasing power of the currency, through supervisory agencies that look to ensure the stability and integrity of the payment systems through which the currency is used for transactions, and through the central bank's role as the operator of the core payment systems, and of course as the issuer of cash. Over the last decade, the role of the state in issuing and regulating money and payments has been challenged with the emergence of cryptocurrencies and the notion that they could replace sovereign money and regulated financial institutions. But cryptocurrencies don't and will not enjoy the commitment offered by the national states. Even when national states fail in their commitment and the local fiat currency loses credibility, one sees that it is often other fiat currencies that become used in a country as a means of payment or store of value rather than cryptocurrencies, and that is likely to continue. But what problem is there in the existing system that we think we need to fix with CBDCs? As cash becomes less frequently used as a means of payment, it is likely that central banks will look to offer its citizens the possibility of enjoying the advantages of a retail fiat currency, money which is a liability of the central bank like cash, in a digital version. More than being just digital cash, CBDC can, if designed properly, allow our citizens to enjoy the technological innovations that are being developed in the digital sphere. Different currencies may have different reasons for considering introducing a digital currency, depending on their particular circumstances. In Israel's case, one reason I think is especially relevant is the potential to provide more competition in a financial system that is dominated by a few large banks and financial institutions. The CBDC can offer a level playing ground on which new entrants can offer financial products. Events over the last year have demonstrated this need. As interest rates were rising, commercial banks did not fully pass on the interest rate increases to the balances of its customers, while on their loans the transmission was full and immediate, and there has been an understandable backlash by the public. Bank customers do have alternatives to deposits at their banks. For example, money market funds that offer both better interest rates and liquidity. But take-up of these products has been relatively slow. When I have talked to people to understand why they don't use these products, what becomes clear is the fear factor. While people are willing to spend time and effort to find a cheaper flight or hotel, when it comes to financial products, they are often paralyzed by the fear of making a mistake. This may be a place where a Bank of Israel digital shekel could also play a role by giving people security regarding the product. In this context, I believe central banks should return to examine the possibility of remunerating CBDCs. That is, for the central bank to pay interest on the CBDCs directly to the end users who hold it and those that enjoy the security provided by the central bank. This is a complicated topic with many implications, and we will need to consider them as the project progresses. Competition and innovation require a flourishing and open ecosystem with many service providers of different types. This was our initial goal for Project Sela, as a proof of concept to show that we can provide a platform that will be supportive of such an ecosystem. As you will see today, the project proved the feasibility of the model we had in mind. Another aspect Project Sela looked at was security. Central bank money must be reliable. Israel has enjoyed a significantly low rate of cash counterfeiting, also due to advanced technologies featured in our banknotes. If central bank money is to go digital, cybersecurity is key. The project was an opportunity to discuss and study cybersecurity elements of CBDC together with our partners. The Project Sela report reflects the joint thinking of the project partners and does not reflect design decisions made by the Bank of Israel CBDC Steering Committee. However, I can tell you that work on the project has been very influential on the design work currently being conducted by the project team, which you will get a peek on at the second part of today's conference. And many elements of Project Sela will probably feed into our understanding. I look forward to hearing your views on some of the lessons from Project Sela in particular and the topics of CBDCs in general. Finally, and probably most importantly, let me also pay special thanks to the organizational committee, Ronit Cohen, Mayan Hendel, and Adi Schweig for all the work they've put into arranging this conference. I wish us all an interesting and enjoyable conference.
Thank you. We are extremely excited that the Deputy Chief Executive of the Hong Kong Monetary Authority, Mr. Howard Lee, is honoring us by his presence today in Tel Aviv. Mr. Lee, I'm happy to invite you to provide some opening remarks.
Good morning, and thank you, everyone. And Andrew, Benedict, and ladies and gentlemen, really pleased to be here today to launch this report of Project Sela. First of all, I would like to express a really big thank you to the Bank of Israel for hosting this event and for their warm hospitality. We are also in this iconic building of the Tel Aviv Stock Exchange, and I must say it's a privilege for me to announce the successful completion of the first joint project between the HMA and the Bank of Israel in this very nice venue in front of a great audience. As Andrew mentioned and the moderator mentioned, Project Sela is chosen to symbolize the efforts between the two central banks, and you know better than I do, it means a rock here in Hebrew. We are also told that Lion Rock is a mountain in Hong Kong, but for those of you who might be less familiar with Hong Kong, I give a little bit more background about the Lion Rock. Of course, it's the most recognizable mountain in Hong Kong, and this is where I'm looking outside the window in my office. As you can probably guess, it's shaped like a mountain, yet it's neither its shape or its height that make it famous. But in Hong Kong, the folklore over the past decades that today make a symbol of the can-do spirit of Hong Kong. So under the Lion Rock is really a symbolism for the can-do spirit and the determined to stride through difficult times and achieve complex tasks to overcome challenges in the heart of all Hong Kong people. So that's the spirit we put into starting with our CBDC project 6 years ago and also going into the Project Sela today. So in the 6 months of collaboration on this Project Sela and after this visit, I can confidently say that this is the same spirit I find in this startup nation. Now, besides having a relevant name, Project Sela also focuses on a highly relevant subject for central banks, CBDC, and the research in the CBDC is a priority for many central banks all over the world, especially in the last couple of years. And for a good reason. Andrew outlined some of the importance of CBDC to the work of central bank and to the community. In fact, the digitalization of currency has the potential to revolutionize a lot of things, including the financial systems, the transaction processes, or even reshape economies. Given these profound implications, at the HKMA, we have been extensively involved in different CBDC research projects since 2017 at both the wholesale and retail level in order to what we call future-proof our economy. I will touch on Project Ambridge, the flagship wholesale CDP project we are undertaking in collaboration with the BIS Innovation Hub and 3 other central banks. And Bank of Israel has also kindly joined as an observer, together with more than 20 other central banks. It's about using a DLT platform to settle multi-currency cross-border payments in CBDC with the goal of addressing the well-known shortcomings of correspondent banking system. The HKMA has been also studying the prospect of issuing a retail CBDC in Hong Kong under Project e-Hong Kong Dollar. Earlier this year, we kickstarted the e-Hong Kong Dollar pilot project, which is in close collaboration with industry participants to test the potential use case of e-Hong Kong Dollar. Now, I did not mention the pilot program just now as a curtain raiser to the later session today in the launch event. I mention it to underline one key aspect of our CBDC research efforts, which is collaboration. The complicated nature of CBDC makes them a challenging and complex field to navigate. The complexity underscores the importance of collaboration, not only with industry participants, but also with other fellow central banks. By sharing knowledge, resources, and expertise, we can ensure that the development and implementation of CBDC are done in a way that mitigates any potential risk and will bring benefits to all. Project Sela is a testament to the enduring power of collaboration by pooling the policy, legal, and technical knowledge of the HKMA, the Bank of Israel, and BIS Innovation Hub, and of all our industry partners. Sela successfully experimented with a novel CBDC architecture that can effectively foster competition and innovation in the provision of CBDC services. But I would say that this is only the start of a process. Just like Andrew mentioned, there are many other aspects that we also need to work at, look at, and experiment. I often describe this kind of project. Technical feasibility is probably stage 1, and sometimes it's the easier one. We also need to make sure that the project would have commercial viability. Otherwise, it's just a project of a statement of purpose. And more importantly and more difficultly, we also need to gain political and public acceptability. This project also did quite a bit of work, like in terms of privacy, that hopefully would enhance the public acceptability and political acceptability going forward. And Andrew outlined some other specific points that you'll be looking at on the digital shekel. And these are things that we in Hong Kong will be looking at under e-Hong Kong Dollar. I really look forward to further and more exchanges with Bank of Israel, the BIS Innovation Hub, and all of you here. Let me thank you all once again for being here, and thank you, Israel, for your warm hospitality. Thank you very much.
Thank you. The collaboration between the Bank of Israel and the Hong Kong Monetary Authority would not have succeeded if not for the extremely important role played by the Bank for International Settlements. I'm honored to invite Ms. Benedict Knowles, head of the Hong Kong Center of the BIS Innovation Hub.
Good. Hello, everyone. So maybe I start with a question to the audience, is how much of you know the BIS? That's actually a really good ratio. I was told maybe most will not know the BIS. Okay, so here comes the trick question then. What is the BIS? Who's the volunteer who will say what the BIS is? There you go. We have a volunteer.
It's easy for me to volunteer because I spent 12 years of my career as head of IT at the BIS.
Well,
So the BIS is an organization that fosters monetary stability by encouraging and facilitating cooperation among central banks.
Absolutely. Well put. Thank you. I would say I didn't plan this, but we did just meet, so I thought I would have a volunteer, and that was very good. So the BIS indeed is an organization of 63 of the world's leading central banks. So together, the BIS represents really a very large part of global GDP, if you look at it this way. And the BIS is a relatively old organization, but I would say we have this new kid on the block, and I wouldn't consider myself a kid anymore. I'm not going to give you my age, but it's not in the kid range. But I do have some younger people in my team, very young people here, who you will see later. So in sum, the BIS Innovation Hub was created in 2019. So it is really the youngest division of the BIS. Before this division, you would have known mostly the BIS as either a central bank participant, so you would have been at the meetings organized by the BIS, which are multiple, or you would have been interacting, for example, through the dealing room of your central bank. You would have been interacting with the dealing room of the BIS. Or if you're from the general public, then you would have seen a lot of the research reports of the BIS. And certainly for me, before I joined the BIS, I had started spotting a lot of the very good research that some specific people in the BIS were doing around the topic of fintech and indeed cryptocurrencies. So it is indeed no surprise that the BIS Innovation Hub was founded around the time that the tensions existed around Libra. So, you know, cryptocurrencies had been around for a few years already, actually, if you look back at the history of Bitcoin. But Ethereum was growing very fast with a lot of ICOs, as you know, and therefore a lot of new tokens. And then came the stablecoin generation, and the stablecoins then took another twist when Facebook wanted to adopt it in the form of Libra. And there were some concerns within the central banking community as to what that would mean for the world, whether that would be a good thing or a bad thing. And it prompted the BIS to issue quite some policy papers, as well the FSB, as you know, and also to set up this BIS Innovation Hub. So within this framework of innovation, we are a very classic BIS division, though, because the key thing we do is we bring central banks together for collaboration, right? And that's what the BIS does in many things, in the BCBS, in the CPMI. It's actually quite similar. But the difference is our focus is very much on the innovation side, and it is very much on practical experimentation. That means on prototype building, right? So we don't just do research. We have to do hands-on technical explorations. So first of all, as a first building block, we definitely keep our eyes on innovation. So myself, I arrived on Saturday, and my team took me around through Tel Aviv to see a number of startups on Sunday, and we got completely immersed because I had to even be on the scooter. And to be honest, my balance is really not the best, so I had to join Daniel's scooter. So that was better than me driving a scooter and getting into an accident. But in sum, we saw about 6, I think, startups, and some of which I know because it's been a long time that I've been looking at innovation. And certainly it was great to see them, you could say, in their home environment. And what struck me is how young your population is, how young your founders are compared to what I see elsewhere. And that dynamism is obviously fantastic. So you could say that falls under one. We are keeping an eye on these developments. The second target is we want to develop public goods for the central banking community. This is, however, a lot harder because public good can take 2 forms, you could say. First is the research, the testing, what we've been doing with Sela and what you will see a bit later. But a more advanced form of public good is one that actually works, right? So an RTGS is a public good, a faster payment system is a public good. And the question is, can we replicate that, for example, in cross-border CBDC? And therefore, we are working on the Enbridge project, which I will discuss later. And so, obviously, we want to serve as a focal point for innovation within the BIS. We grew actually incredibly fast, and for context, maybe this is another trick question. How many offices does the BIS have? I think maybe only you know. Okay. I said BIS, not Innovation Hub. Okay, 3. So it has 1 in Basel, it has a rep office in Hong Kong, and it has a rep office in Mexico. But indeed, when you look at the slide behind me, that is the BIS Innovation Hub presence. And if you imagine that this has grown over 3 years, then you can see that this growth has been incredibly fast, because we have now more presences than the BIS has had over its very long existence. So, and the number you cited is correct. We actually have 6. The 7th is a partnership with the Federal Reserve. So it actually is not a direct BIS operation, you could say. It is a partnership with the Federal Reserve. Now, we chose from the beginning 6 strategic themes. And now you could argue with these, and you could slice and dice them in 500 different ways. We tried to reframe them, and we somehow still converge to these 6. And personally, I'm happy with them. Every single project I've wanted to do, I've been able to put in these 6 themes. So quite obviously, as central banks, we do supervise banks. So SupTech is a matter of interest. Secondly, open finance is a topic we're still trying to shape. And we're thinking about how can we shape this within the BIS Innovation Hub. For a lot of you, you will know the topic of open banking and PSD2, but these are very much policy matters. We want to, as I said, get our hands dirty on the tech side, which means we need to find tech applications. This is the reason we formulate it more broadly as open finance. And we will be doing more work on this in the next year. Then we have central bank digital currency and next-gen FMIs, which often are interlinked. So I will show you some projects later, but again, Enbridge is a combination of CBDC and also a next-gen FMI. But for most of these next-gen FMI projects that we have, it is really around improving the payment systems or somehow changing the payment systems. And then we have 2 specialized topics. One is on green finance, and the other one is cybersecurity. Cybersecurity often falls as part of other projects, obviously. Whereas green finance, I'll show you later some examples of what we did, combining that with tokenization. So, as mentioned, how do we do what we do? We identify a common problem statement, and then we very much do ideation session to come up with solutions, and we collaborate with the necessary stakeholders to put them into practice. So if I need to put this simply, we are one of those think and do tanks. So not just the think tank, but the do tank. And what that means is we really, as I said, get our hands dirty, develop the tech. And against that backdrop, I'm not going to preempt the panel on Sela, and I will end it here, and I will come back to you after the Sela panel to give you a bit more of an overview of the different projects we handle. Thank you.
Thank you again, Mr. Abir, Mr. Lee, and Ms. Nolms for these inspiring opening remarks. Now it's time for a deep dive into Project Sela. Daniel Aidan and Lian Zeng from the BIS Innovation Hub have been busy managing this fascinating project with different partners from all over the world. There may have even been a few sleepless nights writing the project report. They will be joined by Martin Nelson from the M10, who led the team that built Project Sela's technological proof of concept. Daniel, Lian, Martin, I think I'm speaking on behalf of the whole room here to say that we are all very curious to hear more about Sela. So without further ado, Please come on up and tell us.
Can you get the slide? Hello, everybody. Good morning. Shalom lekulam. Toda shabatem. My name is Daniel Idan. I'm a solution architect with the BIS Innovation Hub. I really appreciate that you guys are being here. While Martin is putting up the slide deck, can we get the deck up on the big screen, if that's okay? No, not yet. Perfect. Great. Thank you very much. All right. So we've been tasked with the job of explaining about Project Sela. So I've roped my colleagues into this because I can't do it alone. So we have about the next hour and 15 minutes to go over the project. We'll try to give you a quick overview of the work that we've done. And maybe I'll actually start with the skyline here, the combination of the two cultures. I think the theme of the event is a lot about the collaboration between Hong Kong and Israel. And I've actually had the opportunity recently to explore Hong Kong with Israelis for the first time and explore Israel with Hong Kongers for the first time. So I have some interesting insights, some of which I can share, some of which I can't share. But it's been a fascinating journey. I'll give you an example. On my way here, I was on a stopover, and my colleagues from Hong Kong were coming to Israel. And I open up my phone on the stopover, and the first thing I get is a WhatsApp message of about a middle-aged gentleman in what looked like Speedos, but may have been underwear, buying a bottle of wine at a kiosk with the text of, "You told us Israel was informal, but nothing prepared us for this." So, I have to explain how that's culturally acceptable, and it's okay. And then the inverse is also true as well. When I was in Hong Kong with my Israeli colleagues, and there was a T8 typhoon, which causes Hong Kongers and locals to leave work, go home, lock down, sometimes put sandbags against the windows, and your Israeli colleagues are, "Why don't we go hike to the top of the peak now?" And they still hold it against me why that was a bad idea. So both ways, it's been an interesting collaboration. No hints given. So both ways, it's been an interesting collaboration. I'll let you infer from here what the first couple of sessions looked like when we brought the amazing teams at the Bank of Israel and at the HKMA together. So maybe with that said, we all wouldn't be here without the continuous support of the HKMA and of the Bank of Israel. And I encourage people from Hong Kong to come visit Israel, and I encourage anybody from here that hasn't been to Hong Kong. It's a wonderful, wonderful place to visit and incredibly inspiring. So if you have the opportunity, please do. With that said, of course, our private sector vendors and partners, FIS, M10, Checkpoint, and Clifford Chance, without you guys, we would for sure have more questions than answers. So I really, really appreciate the support and the collaboration. So let's jump into it. Project Sela, an accessible and secure retail CBDC ecosystem. So I think we're going to start with just some fundamentals. So let's just talk about what is CBDC and why we should care. And I think Andrew and Howard have both done a wonderful job motivating the topic. And I'll try to just give a little bit more insight and intuition, because this is an important place to start from. So when we think about what is a CBDC, I like to think about the attributes of CBDC, what type of functions it has. And I think the three things that are the most important are the fact that it's central bank issued, universally accessible, and in an electronic format. So a CBDC sits at the intersection of all three of those things. If you want to ground yourself in things that are more familiar than CBDC, because of course CBDC is up and coming and maybe lacks a little bit of an intuition, then cash that we have today would sit where it's centrally bank issued and it's universally accessible, but it's not digital. So meaning it's a liability of the central bank when we hold it. It's universally accessible, so everybody has access to it. And we'll talk a little bit about that access function, because it's not black or white, it's not totally binary. And a point of the project is to try to create a CBDC that's as accessible as possible. Reserve accounts, so reserve money that sits at the central bank that's only accessible to wholesale institutions, is central bank issued and electronic, but of course not accessible because it's only available to wholesale institutions for wholesale settlements. And we'll see what that looks like as part of the Sela ecosystem. Now, if we want to motivate some intuition on why we should care about CBDC kind of at a higher level, I would propose the following. So when we think about digital, it goes without saying that the digital economy is continuously increasing. It's continuously affecting how we behave, how we purchase, what our habits are, and what our expectations are from finance. And central banks today largely don't have direct access to the digital economy, and they're asking themselves the well-founded question of what is our future role in the digital economy. When we think about access, it's very clear that if you are excluded from the digital economy, that presents more and more of a problem. So Benedict spoke about public goods and the role of central banks and the BIS in providing public goods. And when we think about CBDC, we think about it in terms of accessibility and access to means of payment and finance at large. Last but not least, it's the role of the central bank. So a lot of people say to me, oh, you're working on CBDC, central bank digital currency, but don't I already have digital currency? What does it matter? I already have digital money. I don't understand what the big deal is. And in order to kind of unravel that a little bit, you really need to understand what the special role is of central bank money. And kind of in financial terms, people call it M0. And the notion of M0 is really to support the fact that it is the monetary base. It is the anchor on which everything sits. Let's see if this clicker works. Oh, there we go. So when we think about central bank money, it's really important to understand what are the differences that we have with digital money today. So when we have digital money today, it's founded on a couple of things. We need to remember that there is a cost generally associated with digital money. So there's transaction fees. And even though that may be hidden from you when you go buy your cup of coffee or whatever it is that you're doing with your applications on your phones, on your credit cards, you know, if you pay with 100 shekels, there's 100 shekels coming in, and there's maybe 98 shekels coming out, maybe 97.5, and that happens every single transaction. So that tax on payments is something that was required with older technology, and today may not be needed anymore. So we may be able to make digital payments a lot cheaper. In addition to that, when we think about our digital money today, it has credit risk and settlement risk. And really what that means is that the digital money that we have today isn't a direct liability on the central bank. It's a direct liability usually on a financial institution or another private entity, and that creates credit risk in the payment. It may not be relevant when you're buying a cup of coffee, but if you're doing larger payments or the counterparty may be somewhat questionable, that's when the credit risk and settlement risk seeps in to the equation. And there's also delayed settlement time. So I don't know if you know, but when you do a digital transaction today, usually it doesn't settle instantly. It takes a little bit of time. Sometimes it's T+1, sometimes it's T+2, but that settlement risk, that settlement delay is there. So when you think about the digital money that you have today, really the scenario that's happening behind the scenes is I'm going to swipe my credit card or tap my phone, and the merchant is going to get the money. They're not going to get the 100 shekels, they're going to get the 97.5, and they're going to get it in 2 days. So I would love if you would be explicit next time you use your digital payment and say, I'll pay you tomorrow or the next day, and I'll pay you 97 out of the 100 shekels that I owe you. And that's baked into the system. So the prospect of a new layer of central bank money in addition to cash and reserves, not to replace cash and reserves, is the central bank playing a more direct role in the digital economy, potentially creating instant settlement, lower fees, and more access. So it's really about renewing kind of the base form of money. There are other payment alternatives, but if you ask me, CBDC is the best. So that's why we're here today. So let's move on. Benedict talked a little bit about the BIS and the BIS Innovation Hub, and I just want to kind of show this map of all of our projects that are in flight. And what you can see along the y-axis is all the different project themes, and what you can see along the x-axis is the maturity of all the projects. And I don't want to overwhelm you, but I just want to draw your attention to really how busy this CBDC row is. So it's a really, really crowded space, and Project Sela sits between the CBDC row and the cybersecurity row. So it really kind of straddles both those worlds. It's a very, very necessary requirement for rolling out any payment system, and we'll talk a lot about cybersecurity and the significance of cybersecurity with CBDC projects in particular. When we think about an innovation project, so it was mentioned by Howard that innovation projects really test specific features of a solution. The point here isn't to do something that tests everything all at the same time, but when we put the insights of all of these projects together, we can build more intuition and a better perspective on what will or could happen when we roll out these type of functions. Most of our projects are at a time horizon that is about maybe 3 to 5 years out, so we try not to be with technologies that are in production today and not things that are too abstract, so we're constantly on the event horizon. The project had a 6-month delivery time in terms of technical delivery, but about a year from start to finish. And the outcome of the project is a technical proof of concept. It's a project report that I'm sure you guys will all download and read, because of course today's session won't be enough, and you'll have some light reading if you're interested tonight. It's about 60 pages short. And that's what an innovation hub project looks like. So with that said, I would love to introduce Project Sela, an accessible and cyber secure CBDC. And I will pass it over to Leanne to give you some intuition on the ecosystem and the driving goals of the project.
Thank you. Thank you so much, Daniel. It's always very hard to follow Daniel. He's such a great public speaker, but I can promise a lot more hand gestures than he did, so hopefully that'll make it a little more entertaining. Daniel provided a great context for some of the key motivations behind central bank's efforts in exploring retail CBDCs, and Project Sela aims to contribute to meeting some of these design challenges and complexities of designing a central bank digital currency. Specifically focusing on the attributes of innovation, access, and cybersecurity in a CBDC ecosystem. So some of the main questions Project Sela aims to answer is how a CBDC system can achieve the right balance between these three sometimes contradicting attributes and features, and also whether it can retain some of the benefits of cash, as Daniel mentioned, being free of credit risk, being settled instantaneously, and preserving a certain amount of privacy of the end users, as well as take the benefits of the digital payments that we experience in today's payment systems, which are offered by the private sector. So with that said, the key goals of Project Sela is to build an accessible and cyber-secure retail CBDC ecosystem proof of concept that maximizes access by lowering entry barriers, not just for the payment service providers, but also the end users. Minimize cyber threats that may come with this increased access through preventative software design. Preserve some of the desirable attributes of cash while capturing the benefits of payments digitalization. So let me first provide an overview of the key ecosystem participants in Sela. So we have, of course, the central bank. We also have funding institutions, which are very similar to commercial banks in today's payment systems. A new type of payment service provider called an access enabler, or an AE, and of course, the end users. So the central bank plays a key role in the Sela CBDC ecosystem. Of course, it issues and redeems the CBDC, which represents a direct liability of the central bank like cash. It also provides CBDC accounts to end users, and these accounts are unique across each end user, representing a single pool of liquidity of CBDC for each end user. And finally, the central bank operates the retail CBDC ledger. So this means that every CBDC transaction made by end users is actually executed by the central bank and settled directly on the central bank's balance sheet with instant finality and free of credit risk, similar to cash. So the central bank plays a key role in providing the foundation of trust, security, and liquidity in the CBDC ecosystem. At the same time, central banks alone cannot support a wide variety of CBDC use cases, as innovative and creative tailor-made solutions require healthy competition, which has long been the purview of the private sector payment service intermediaries. So a key design feature of Project Sela was to unbundle the activities related to a CBDC account and redistribute them among the central bank and private sector payment service providers to leverage the benefits of each individual sector and increase efficiency and access in the ecosystem. So before I talk about our novel type of intermediary that's key to developing these innovative payment solutions, let me first talk about the role of existing institutions that we have in today's payment systems. So funding institutions, or essentially banks, have reserve accounts in the RTGS with the central bank, and they play a key role in ensuring the singleness of money or the interoperability of CBDC to and from other forms of regulated money, such as commercial bank deposits and cash. And any end user, regardless of whether they have an account with a funding institution, can convert cash to and from CBDC through the ATMs managed by the funding institutions. So they also support an important financial inclusion role in Sela as well. And Next, we have a new type of intermediary that in Sela we call an access enabler. Now, access enablers are a new type of payment service provider that essentially provide all customer-facing CBDC services other than the conversion services provided by the funding institutions. So on top of the basic foundation offered by the central bank, these these payment service providers have access to individual CBDC account information and can build value-added services and innovative payment interactions for the end user. And so access enablers can do things like KYC, onboarding, they ensure regulation compliance, such as with AML and CFT transaction screening requirements. And they also enforce CBDC scheme rules set by the central bank. For example, many central banks have expressed the desire to have holding limits to mitigate credit disintermediation risks. And this is something that in the POC we also built and that access enablers support the enforcement of. And also access enablers, because they intermediate between the end users and the central bank, they protect the privacy of end users from the central bank because all requests routed to the CBDC platform must go through the access enablers. And before this is sent to the CBDC platform, the end users would hide or mask the sensitive personal information so that the central bank can only see a pseudo-anonymous CBDC account associated with each end user. And I guess most importantly, the attribute of access enablers is that they never hold or control end user CBDC funds throughout the provision of their CBDC services to end users, nor do they need to hold any liquidity to provide these services to the end users. And so this is an important distinction that distinguishes these intermediaries compared to intermediaries that we see in existing payment systems that are often exposed or liable for end user funds. Oh, and I should mention that this was key in Sela to reducing the entry barriers to include a much wider range of intermediaries and entities that can act as an access enabler and increase access overall to the CBDC system. And finally, we have the end users. End users are basically like you and me, individuals or entities, businesses or government agencies with retail payment needs. I should mention, even though there's only one bullet point to the end user, together with the central bank, they represent the most critical components of the CBDC system, as they represent the point of initiation of the movement of funds, as well as the point of settlement of these funds. And as a result, they warrant the most high cyber protection, and this is something that Daniel will talk about a little bit later as well. So something unique about Project Sela's architecture is that end users actually hold and control their own CBDC funds through the wallet applications provided by the access enablers and through sole authority over their cryptographic private keys. So if you recall, I said that access enablers never hold or control end user funds, and this is because the end users have full control over their own CBDC. But what does this mean exactly? What does it mean to have full control of your own CBDC? So the concept of holding and control of digital assets currently remains universally unsettled, and many different jurisdictions are still building the legal frameworks to determine what exactly holding of these digital asset means in a legal context. So in order to guide our analysis, we leveraged the global UniDroit principles on digital assets that has a three-pronged test of control to decide when an entity or an individual can be legally deemed to be holding a digital asset with the help of our legal vendor, Clifford Chance. And so the three-pronged approach consists of, first of all, the ability to benefit from the digital asset, the ability to prevent others from benefiting from the digital asset, and the ability to transfer all of the benefits from a digital asset. Translated into Sela's context, this essentially means having access or control over the private keys of the end users, as well as taking hold of the CBDC in a sort of custodial arrangement. And because access enablers are unable to initiate movement of the end user CBDCs on their own accord, and because they don't have access to the private keys of the end users, we argue that they can be seen as never holding or touching the CBDC. On the other hand, while it can be argued that the central bank does have some influence over individual CBDC balances, these can only be exercised in extreme circumstances within the existing legal framework. For example, in our case, central banks can recover accounts for end users if they lose their cryptographic keys, and these exceptions are accepted by the end users when they sign on to the CBDC platform. So, sorry, after all of this very boring overview of each participant's functions, maybe I can provide a more interesting example or contrast of how a payment in Sela with the CBDC contrasts with an existing digital payment in today's payment systems. So in today's payment systems, suppose an end user, Alice, wants to pay a merchant with her credit card for purchasing some goods. So Alice would first need to send a message to her bank, and then funds would need to move from Alice's bank to her issuing bank to the acquiring bank, settled with interbank obligations on the central bank's balance sheet, and to the merchant's bank before the merchant sends a message to the merchant's bank sends a message to the merchant notifying him or her that the funds have been deposited. Each step of this transaction does not take place simultaneously, and as a result, credit, liquidity, and settlement risks arise at each leg of the transaction, leading to risks and higher costs that are often passed on to the end user. If we now look at a CBDC payment transfer in Sela's context, while messages would need to move from Alice to and the merchant's access enablers respectively, funds move instantaneously in a bilateral direct manner directly from Alice to the merchant without ever touching the balance sheets of the intermediaries involved. And this is critical to how the access enablers can improve liquidity and access and competition in the CBDC ecosystem, as because they're not exposed to the end customer funds, they may be subject to lower capital requirements, for example, which can serve as a lowered entry barrier to increase more types of intermediaries to join the ecosystem. So with that said, I'll pass it back to you, Daniel, to talk about the POC setup. Thank you.
Great, thank you. All right. So I wanted to kind of pop the hood a little bit of the car and show you the engine underneath before I move it over to Martin to give you a real taste and feel of the demo. So let's talk a little bit about the proof of concept setup. So we'll start with the central banks, and we're only going to go one level down the rabbit hole. I promise I won't get too technical and boring. But I think it's important to kind of understand, we call this a CBDC ecosystem project. So we really tried to build out an inclusive ecosystem. So I just want to give some intuition, in addition to what Leanne provided, of who the different participants are, also what the different components and technical responsibilities that they have is on like a day-to-day ongoing basis. So let's start with the central bank up at the top. So within the central bank, you have an API, an application programming interface, and it's through this API that all the inbound and outbound messages come into the central bank. Behind that API sits a CBDC application, and you can think about this in addition to other things. The CBDC application, mostly in Sela, what it will do is it will coordinate between the RTGS system and the CBDC ledger. So an RTGS system is the existing RTGS, the real-time gross settlement system, and that is a function of the central bank today that's available to wholesale institutions, and that's where they keep their reserves. The ledger is where the CBDC balances sit and where the transactions are settled at the central bank for retail CBDC. What's interesting about the implementation of the ledger, we used blockchain technology run in a private permissioned ledger that's currently operated completely at the central bank, but this is something that could be distributed if that was a desirable function of the settlement ledger. The ledger is very, very lean and simple, and as a consequence of that, it's able to scale up to retail transaction volumes. So we're talking hundreds of thousands of transactions per second, similar to what we see in big economies and card networks. The only thing I didn't mention is the HSM. HSM stands for a hardware security model. That's where a lot of the cryptographic keys and kind of the digital assets and the things that need to be locked down are. I can tell you that yesterday we had a wonderful tour of the Central Bank of Israel, and there were definitely some HSMs lined up on the racks. So thank you for that. Let's continue down to the access enablers. So the access enablers have a little bit of a simpler setup. Again, they have the API, inbound, outbound messages. The API connects to a CBDC backend, and the CBDC backend really is the technical part that coordinates between the central bank and the user application underneath. So when you use an app on your app on your phone is talking to something in the cloud. That something that they're talking to is the backend service. We assume that the CBDC are cloud, the CBDC backends at the access enablers are cloud-based. Part of that has to do with access and cost and operational efficiencies. And in addition to that CBDC backend, we provided a CBDC enclave where the enclave contains business logic. And within that enclave, there's something called a KMAS, which stands for Key Management as a Service, which is a cloud-based key, basically a cloud-based HSM. Within the enclave, what was special about the enclave is actually, you can think about it like a black box that you can put code into, and you can give it to anybody to run that code and know that they ran that code in that particular enclave correctly. So what we use this to demonstrate is that the central bank can actually create functions, put them in an enclave, and distribute them to access enablers, not only just to help them with things that are common, like, for example, key management in this case, but to also lower the barriers of entry. So if an access enabler doesn't necessarily have best practices of how to manage their keys or other things, the central banks can essentially lower the barriers by providing kind of these lockdown functions within that context. One thing that I forgot to mention is just the different color schemes of the icons plays an important role. So maybe I'll start from the top. So the icons that are in red, we think about them as ledger components. These are largely off-the-shelf things, relatively mature, or dare I say, production grade that we used within the context of building the ecosystem. The things in blue are a CBDC reference architecture. So what this means is these are the things that we built during the course of the project and not just tweaked, we actually built them. And the idea here is that when the project is done, people can look at this reference architecture and either extend it and build on top of it, or potentially also copy it and learn from it and evolve it from there. The last thing is these emulators, and emulators were really built only for the role of supporting other services. So the RTGS is a great example. We didn't build a full RTGS. We just built the parts that were needed to facilitate the rest of the ecosystem. So all the components kind of fall into one of those three categories. Next, the funding institutions. The funding institutions probably have the most complex technical setup because they have to do everything that they do today in addition to the new things that they need to do. The funding institutions run the ATM switch network, and we'll show how that provides accessibility between cash and CBDC transactions, so you can transfer between cash and CBDC. They provide deposit applications, so providing deposits for end users in commercial bank money, so similar to what funding institutions do today. They have an application for managing their reserve accounts within the RTGS. Those are all emulators. The most of our work was done on that, the CBDC backend is like the CBDC backend of the access enablers and mostly manages liquidity between the RTGS and the funding institution's CBDC wallet. Okay, I know that that's a mouthful. We'll see it in action when Martin provides the demo. And then there's the HSM where the keys are and all that fun stuff. Last but not least, we have the users, the Alices, the Bobs. All of a sudden, they have names, so we're going to try to make it a little bit more intuitive and personal. And these users, of course, have access to deposit accounts, so that's what the gray circle is. So thinking about it, these are your traditional banking applications. And in addition to that, they have a CBDC app, and within the CBDC app, the CBDC wallet. So what's the distinction there? The CBDC app you can think of as having all of the business context, so maybe a CBDC app does payments or lending or whatever it could be. The wallet is really kind of the thing that manages the signing and the initiation of transactions, and that's what the distinction is between the blue square and the red wallet contained within it. And that wallet calls out to something called a trusted execution environment. And when you use Apple Pay or Google Pay or things like that on your phone, where your credit card information token is stored is within that trusted execution environment. So the CBDC app, business context, the wallet that manages the signing and the initiation of transactions, and then the call out to the trusted execution environment within your device. And later, what Martin's going to demo and what you'll be able to download today and get a little souvenir from is the CBDC application itself. So hopefully it will provide you a little souvenir, but I want to remind you that you're not walking away with the entire Sela solution, you're walking away with just the little kind of reference architecture that's the end user component. So it doesn't end here. Just to give a little bit of an intuition, we talk about these access enablers, lowering barriers of entry, things like that. There's just a couple of things that I want to point out. We mentioned that the CBDC ledger sits at the top and there's unique accounts for each user. So there's a single pool of money that sits for each user that's mapped to each user. But that doesn't mean that you only have access from a single access enabler. The idea here is to provide users mobility across access enablers. They don't have to get locked in to any specific service just by virtue of doing KYC or onboarding. And you can see here we've fanned out multiple users. So you have your Alice, your Bobs, your Charlies, your Daves, and every one of them can decide how many access enablers they're going to use for whatever reasons that drive them. And you can see that they all have a one-to-many mappings from users to access enablers, and then access enablers many-to-one mapping into accounts. So what I mean by that is, for example, Bob has 3 access enablers. Bob goes into all 3 access enablers, but all 3 access enablers ultimately map to one account. So what that means is if Bob does one thing with one access enabler, his balance will change on all of his access enablers. So it's a single pool of liquidity that these access enablers are connecting to. Of course, like we mentioned, they don't hold the funds themselves, nor do they touch it at any point in any transaction. So when we think about these access enablers, just to develop a little bit of an intuition, I think until now we've thought about them as kind of payment applications. But if anybody here has heard of the term embedded finance, or anything where you think about the applications on your phone where you have to press to pay and you get the Apple Wallet or the Google Wallet kind of popping up, you can think of access enablers like that. It really enables not just payment apps that maybe focus on push payments or request to pay payments or split payments or recurring payments, and there's all kinds of creativity that can happen just in that space, but it can also be your local supermarket or your Uber or your Twint or whatever it is that you have that has payment services embedded. So at the same time when you have Stripe or Google Pay or Alipay, that's an opportunity for a CBDC application and a CBDC settlement of central bank money to present itself within the context of a wider application. Okay? So that gives maybe a little bit of an intuition to what access enablers can do in the future. And with that, oh no, sorry, there's the cybersecurity part. Sorry, I thought I'd pass it on to Martin now. So let's talk a little bit about cybersecurity before we pass it on to the demo. So we took a very preventative approach to cybersecurity, and I'll explain what that means. Cybersecurity is a topic that is never ending, and we are really just on our foray into this space. And the way we modeled cybersecurity is as follows. There's a 3-step approach to thinking about cybersecurity. There's the potential of a threat. When that threat manifests itself, it becomes a compromise, and the duration of the time of that compromise will manifest itself as actual harm to the assets. So the negative forces that are acting upon this, when you think about the threat, well, the negative force that acts upon the threat is the surface exposure. So the intuition there is, well, if you have a lockdown system that nobody can access and no surface area, well, that's harder to attack. If you have something that's widely accessible, like the objective of Project Sela, well, guess what? That may be more easier to penetrate and harm. And then once that harm manifests itself, well, depending on what your asset exposure is, that will ultimately determine the degree of harm that's done. So for example, if you're providing a digital service and you're storing people's names and passwords, if you store them in plain text, once once the threat has turned into compromise, well, then they have all the password and all the usernames. But if they were encrypted, well, then maybe there's less harm that's done. So against these two negative forces, there's preventative security measures that can be done to mitigate the surface exposure and the threat, and then of course there's reactive things that can be done once a compromise is detected. So to achieve cybersecurity, you really have to iterate through this over and over again, and it's a little bit of a cat and mouse game, and I see a lot of cybersecurity experts in the room, and they're all nodding their heads, so I know I'm on point. But we tried to really work at the intersection of where it's relevant to CBDC and payment systems and where we can do preventative application design. So we really focused on the top part there, preventative, to mitigate some of the access threat that could happen. So quickly, I just want to kind of review what were the things that were deemed the most important, and maybe a little bit of an intuition on some of the things that we did from a design perspective to mitigate some of this threat. So we really have to ask ourselves, what are the things that matter the most? What are the things that we are protecting? So pretty much in order of importance. The first one is the ledger itself. So the ledger that sits way at the top at the central bank, that's of course where the balances are stored, where transaction finality happens, super mission critical part of the system. The next one, as Leanne mentioned, the user devices. So the user devices, if you think of them, this is really where users are represented on the system. So if the device is compromised and can do whatever it wants or is attacked by someone that can manipulate the device, that, of course, is an issue as well. Then user authentication. And what this means is when a user comes and says, hey, I'm Daniel, I want to do this, you need to be able to authenticate them correctly, meaning know that they are, in fact, who they say they are. So you can think about biometric IDs, things like that. That is all helpful tools with user authentication. User authorization. So when I say, hey, I'm Daniel, I want to move funds, to make sure that I'm acting in accordance to the permissions that I have. I should be able to move my own funds. I shouldn't be able to move Martin or Leanne's funds, for example. So that's what user authorizations are. And then last but not least, PII, which is a fancy acronym for Personal Identifiable Information and Transaction History. So really protecting the data that's created by using the platform is also kind of a mission-critical cybersecurity component that needs to be protected. So that's the what. That's what we protected. A little bit about the how we protected them. So we developed a couple of things as we went through the delivery work. So the first thing is this notion of flexible chained authentication. And if you look at the image, the blue going from the central bank to the access enabler, and then the red that goes from the access enabler to the user is trying to show that there's a chained authentication protocol where the central bank authenticates with the access enabler through a certain standard, and then the access enabler can kind of fan out to many more users through a little bit of a different mechanism. And it's this chained authentication that provides us kind of the flexibility and the scalability of the authentication so that the central bank doesn't have to authenticate users directly. There's other implications of this on data and transaction history and things like that. The next one is direct authorization, and this is a little bit in contrast to the chained authentication. So even though we have this chained authentication protocol, the direct authorization is really showing that only the user with the user's self-generated key that's stored in their trusted execution environment can initiate transactions or do, in fact, anything on the ledger. So there's, in a way, even though there's a chained authentication protocol, a direct authorization protocol between the user and the user's account that sits on the ledger. The next one, data management and encryption. So we talked about this a little bit to give an intuition. The data management and encryption really has to do with, well, the data, most of the personal identifiable information resides at the access enablers. The way we created the access enablers to be modular means that your data can be spread out across many access enablers and not centralized in one honeypot that would be very, very valuable to attack. So your transaction history, for example, would be spread out across the access enablers. And anything that's moved from the access enablers to the central bank, for example, to create that unique account, is encrypted in such a way that it can't expose the actual user. It can't be kind of rewound and figured out, so using hash functions and things like that. So the data's been spread out through the access enablers. It's been encrypted using hash functions. You can see the PII data that sits in the database on the access enablers is H of PII up at the central bank, showing that it's hashed and obfuscated. We took a look at programmability, and a lot of the momentum behind digital payments and digital assets in CBDC has to do with the ability of these things to be programmed. And we took a very cautious approach to programmability, and we split it up into 3 components. We split it up into automation, conditionality, and composability. And we took a careful approach, and we started with automation. We made a little bit of headway, but conditionality and composability has largely been left out, and I'll give an intuition onto what those things are in a second. And then we spoke a little bit in the report about deployment best practices, and really this is an endless list. But we started off by looking at things like network isolation, device protection, cloud application management systems, and things like that. And I'm sure our team at Checkpoint are going to enlighten us a little bit more with what those things are. Let's give a little bit of an intuition on programmability, and then I'll pass it off to Martin because he's the fun one, I promise. It gets much less serious once we do the demo. So automation. So I said automation, conditionality, and composability. So automation all happens at the central bank level. So one thing that is important is where these functions actually happen. So automation happens at the central bank level, and you can think of automation as do this. And let's leave this as a black box for a moment. Conditionality and composability sits at the access enablers. So the access enablers, in a way, they're applications. The business context that they provide does the conditionality and then the composability. So to give a little bit of an intuition on what these things are, I'll show this, and I'll go through this very quickly, just at a very high level. So automation. Automation can be things like pay, Alice pays Bob, amount X. That's a simple black box function. It also could be completely deterministic. So you know exactly what's going to happen when you call that type of function. It could be Alice, pay Bob, Charlie, and Dave, and many other people, amount X as well. So for example, a split payment. That could be something that's provided by the ledger itself, okay? Still, automation. We're going to show how in Sela you cannot just call and automate and say, do this yourself, but you can also request another user do something that you kind of hand them in a payload. So I can create a transaction and say, hey, Martin, can you execute this transaction? And we implemented something called request to pay, where you don't just pay someone, you can actually request someone pay you. So that's an example of how you can kind of open up the automation. And of course, you can do Alice, pay Bob, Charlie, Dave, X amount on a recurring basis. So you can think about something like that, maybe an application to pay your bills. Those are still very simple automated tasks that could be relatively deterministic. So they can be kind of held a little bit closer and constrained. From there, let's go to conditionality. I don't mean conditionality in the if-then-else sense. I mean conditionality on things that are conditioned on things that are external to the system. So you can think about this as kind of general compute environments, which are very powerful, but also somewhat dangerous and need to be looked at very carefully and evaluated. We spent a day on Sunday touring a lot of tech companies here, and one of the things that we saw around cybersecurity were really a lot of the vulnerabilities that a lot of these programmable functions have on different blockchains. So that's something that we're looking at very carefully, but the intuition around conditionality is, hey, Alice pay Bob amount X if team A wins against team B. And of course, the ledger doesn't know if team A wins against team B. That's a conditional thing that will come from some external source. So that's what we mean when we think about kind of general conditionality of programmability. And then last but not least, this notion of composability, where composability really is about certain functions calling other functions. And with those of you that are familiar with the DeFi space, with the distributed finance space, a lot of the power of programmable payments comes from the ability to compose them together with each other. So the example here is you can call a function that has a parameter of another function, so pay, Alice pay Bob amount X, and I'm going to give this function another function called double pay. And what this shows is, well, if team A wins against team B, then Alice pays Bob double, and if they don't, maybe Alice moves on to Charlie and does a double pay for amount Y. So that's really taking multiple conditional execution environments and kind of chaining them together in a way that creates a whole that is more than the sum of the parts. Okay? So I hope that gives a little bit of an intuition on how we decompose programmability. And with that, I will pass it on to Martin to do the real deal. Thank you.
Okay. Do you know what day it is today? Well, you know the date, right? It's September 12th. And where I spent the last 25 years was Silicon Valley. And this is like Hanukkah or Christmas in Silicon Valley, because it's the day that Apple reveals the new products. And so the fact that we're here on the September 12th, you know, Daniel promised me there's no pressure on the demos here, right? Anyway, so pleased to be here. So let's put this all into action, what both Leanne and Daniel have gone through here. We're going to start by reintroducing our two friends, Alice and Bob. You'll hear lots about them. We've been living with them for the last 6 months. We're starting to get a little tired of them, but this will be the grand finale for them. So to sort of reset it here, right, you heard about the access enablers. You heard about the central bank and the users. So in our setting here, Alice is connecting to her central bank or CBDC account through two access enablers, and they are called MoneyPot, nothing to do with California here, and GeekSave. And Bob is accessing his account through the same access enabler called GeekSave. And then we have, just for a purpose of demonstrating there could be multiple access enablers, we have a third one here as well. What you don't see on the screen here is the funding institution. So we'll see a funding institution, which is basically a commercial bank called M10 Bank. I promise you, it is not a real bank. There is no money in that bank, although I wish there was. Okay, so I'm going to use a few tools. We have a few slides here, and we have our devices for Alice and Bob, and these are just to show you that this is not fake, right? Here are my two devices. They are actually say Alice and Bob. And then we have two admin tools. We have an admin tool for the access enabler, and then we have an admin tool for the central bank. And the purpose of these is simply just to show, we're not going to dig into details about the admin views, but it's more to show the transactions when we do funding, defunding, transfers, and so on. Okay, so let's switch back to our screens here. So we have Alice. We're going to start and take a look at her GeekSave app. You see here at the top of the screen, you see there's a checking account with M10 Bank showing at the top. Right? And this means Alice has linked her deposit account. Oops, I'm so sorry. At the top of the screen, you see her M10 Bank account. And there's about 52,000 shekels in there. She's got a good day today. But there's also a CBDC account. So she has already linked, she's activated her CBDC account or her wallet. She has no money in it yet, right? So through some magic, we're going to move funds into that wallet for her. If we look at the other app, you see here the MoneyPot app, she hasn't gone as far here. She has onboarded with MoneyPot. She's gone through the KYC process, we presume, but she hasn't yet activated her CBDC account through this access enabler. But let's do that. Okay, shall we dare and push the button? All right, we'll do that. We say activate CBDC account. And now you see that we also demonstrate the balance of the CBDC account at the top of her screen. I could trick you here, right? It could be just two different accounts, but I'll show you later when we do transfers that they actually keep sync between both GeekSave and MoneyPot. I am not going to link this to M10 Bank, so we're just going to skip that for now. So now we have Alice. Her accounts are set up. Let's switch over to our friend Bob. He has also onboarded with GeekSave. And we, of course, assume that GeekSave has done the appropriate KYC on Bob. Bob has activated already his CBDC account. It's also empty. Now, unlike Alice, Bob is rather suspicious of commercial banks and doesn't have a bank account, so he relies on cash. And together with our two friends today, we will step through a number of interactions. We're going to do funding and defunding of CBDC. We're going to transfer CBDC between Alice and Bob. We're going to look at some of the programmability stuff that Daniel spoke about. And we're also going to look about how we automate management of users' account balances, such that ensuring that users don't hold more CBDC than potentially an account limit might have been. So I do want to just mention a couple of things on the admin screens. Let's start with the central bank. So the central bank admin basically give the central bank administrator a snapshot of the ecosystem, like how many funding institutions, how many access enablers, how many users, CBDC in circulation, how many payments, and so on and so forth. And then you see there are a bunch of other tabs. You can go into detail about each of these aspects. I just want to mention on the settings tab, and you keep this in mind. So for the purpose of this demo, if desired, the central bank can define scheme rules, such as holding limits, to mitigate the risk of bank disintermediations, Leanne mentioned earlier, and a transaction limit to comply with potentially AML regulations. And so for our demo, we've set both of those limits to 5,000 shekels. On the access enabler side, it's a very similar view, but what you do see here, actually, let me go back here one more time to the central banks. If we look at the accounts that are available in this environment, you see there's a funding institution account at the top, and then there are 3 users. But the central bank does not know who these users are. They just know that there is an account number, right? If we, however, switch over to the access enabler, you will see the names of these parties, right? And that is, of course, because the access enablers, they're performing compliance checks, whether it's AML or CFT, and they need to have the PII, as Daniel spoke about earlier. So we have it set up now. You know that you've seen the screens. You know Alice and Bob. Get familiar with them. And now we're going to start to look at the first action here, which is actually funding a CBDC account. And so we're going to start by funding using using deposits. In the first step, see, I have my cursor. Let me see if I can turn on the little laser pointer here. In the first step here, we have the Alice digitally signing an instruction to fund CBDC, and this instruction is then submitted to her access enabler, GeekSave. By the way, the digital signature, like all digital signatures by users in the Sela system, was created using Alice's private key, and that private key is securely stored inside of this wallet, like Daniel spoke about earlier, right? And whether you call it a secure enclave or trusted execution environment, but the whole point is that that key cannot leave the device. You essentially have to physically open it up and get to the chip of the device. Now, GeekSave performs any compliance checks that are required by the scheme rules, and it checks that Alice CBDC balance. It connects it in step number 2 to the ledger to see if she has any funds already in her account, because when she funds this account, it may get over the holding limit. Remember, we set it at 5,000 shekels. So the access enabler is basically checking if Alice is going to fund her account, whether that limit will be exceeded. So in this case, then, it won't. So the access enabler then, in step number 3, connects to the funding institution and say, hey, can you fund Alice's account? Because you have the deposits for Alice. And so the funding institution says, sure, I'll do that, because I have now verified by taking the public key of both the access enabler and the user. This doesn't have to be, but it depends on how the bank sets it up, essentially. But we presume that they do verify that Alice and her access enabler are sort of legitimate. And assuming that checks out, it will debit her account. It will basically take funds out of her bank account. And then the funding institution, in step number 5, connects to the central bank and say, can you move, in this case, we're going to move 100 shekels. Can you move 100 shekels from my account, my being M10 Bank or the funding institution, to Alice's account? Right? That's the instruction that the central bank receives. The central bank will also verify that the funding institution is legitimate, that it's correctly signed, and all those things, right? And assuming that all that checks out positively, then the app at the central bank connects to the ledger and say, okay, move basically flip the balance between the funding institution and Alice, and it's all done, right? Wasn't that easy? Okay, so to fund the CBDC, well, there are actually quite a few steps that are required, an interaction between the parties, whether it's the funding institution and the access enabler. The access enabler has a very important role in all this, right? Now, if we go to our friend Alice and take a look at, her app and what it looks like from her perspective. So we're going to go into GeekSave and we're going to send, okay, fund CBDC. And fund your CBDC account via linked payment method, and that is the M10 Bank that I created previously. And we are going to fund here 3,000 shekels. And you see, it's now been funded. All right, but actually, I only wanted to fund it with 2,000, so let me defund. So if defund with a linked payment account, and we'll move 1,000 shekels back from the CBDC wallet into the checking account. All right? Now, you saw all that happen, the magic, that was pretty easy, but a lot easier than all those arrows on the previous slide. If we take a look at the access enabler and we check out the funding and defunding tab, and we might have to refresh here. We also want to see the defunding requests. So you see in the first step, we funded 3,000 shekels for Alice, and it was defunded a step after 1,000 shekel. And of course, this is the access enabler. The access enabler knows the identity of the user that's performing these actions. If you would look at this, well, actually, the central bank doesn't even know that this happened. It would just know that the commercial bank or the funding institution moved funds from one account to another. That's all it knows. All right, now defunding of that CBDC wallet. The second step I took here is roughly the reverse. I'm actually not going to go through all those, but it's you're moving funds out of the CBDC wallet and back into the commercial bank deposit account. All right, so next, we have a little bit of an issue with Bob, right? Remember Bob was the anti-banker, and we have to do this through a little bit of a different method, right? So we're gonna fund Bob's account using a ATM. Now he's a cash person, right? And so when we built this prototype, we realized that it was going to be a stretch to get a few ATM machines into our development environment. And so what we ended up doing is this. We created our own ATM. So say hi to the M10 ATM, right? And the M10 ATM has been integrated with the Sela network here, and it runs, it connects directly to the CBDC platform. Of course, in production, it could be any participating ATM. It won't just be an M10 ATM, and any participating ATM that's connected to the local ATM network. And the process of funding CBDC with cash is rather similar to funding through a deposit account, but we will use this ATM, right? So let me just walk through these steps. You notice, hopefully, that it's somewhat similar. So Bob, in this case, he signs an instruction to essentially acquire CBDC, and this instruction is then submitted to GeekSafe, the access enabler. GeekSafe performs, again, any checks required by the scheme rules and verifies that it doesn't go over the balance again, right, in step number 2. And then GeekSafe endorses, right, digitally signs the request from Bob, basically co-signing. So the request, like in the previous step, is signed by both Bob and his access enabler, and submits the request then to the central bank. And the central bank gets this and say, someone wants to deposit cash. So I'm going to return a one-time password, essentially, right? It's just a code, a PIN code, if you want. And that PIN code is then returned to the access enabler that then provides it to Bob. Now, Bob has he has a code. He walks up to an ATM. Step number 4, punches in the PIN number or the OTP, enters the cash, and the funding institution of that ATM, the M10 bank, tongue twister, then again connects to the central bank and says, can you please move funds from my account, the M10 bank account, to Bob's account? All right? Simple. Let's go back to Bob. So from Bob's perspective, he jumps into the GeekSave app, and we're not going to link the payment method here because, as you remember, he was the anti-banker. So he's going to fund his account. He's going to fund it via an ATM. And in this scenario, he has 500 shekels that he's going to put into his CBDC account. And he gets that code in return from the central bank. And then he goes up to the M10 ATM. And let's see if we can type this in correctly. All right, that should be right. And we click enter, and it says, insert the cash. It's hard to do that on a laptop, so I will just do this virtually. And you see, cash was inserted to the machine. And if we go back and look at the transaction history of Bob, voila, magic, he has 500 shekels in his account. Now, let's close down our wonderful ATM, and let's switch over to the central bank view because we have a cash transfer section there. And let's see if this transaction actually showed up there. And look at that. There is the 500 shekels that Bob funded. Now, again, the central bank doesn't know who this guy is or girl, right? It just knows that 500 shekel was put into an account. So it's anonymous in that sense. Okay, wonderful. We have 2 users with CBDC now. So what could you actually do once you have CBDC in your wallet? Well, how about you actually transfer funds between these guys as a start, right? So if we take a look at the transfer part of CBDC, let's just 1 second here. We're gonna have Bob send 100 shekels to Alice. And so what Bob does, guess what? He digitally signs an instruction to transfer money, right? The same thing, every time Bob or Alice or any party in the system connects to do anything, they digitally sign it, because that is how they ultimately authenticate and are authorized in the system later on, right? So GeekSafe receives this request, validates it, performed compliance tasks, check that Bob has enough funds, and finally endorses the request by also signing it, of course, sends it to the ledger, and the central bank now receives this, of course, and validates Bob and GeekSafe and that everything is good, right? But before he can move, or the ledger can actually move funds, it will check if any of Alice's access enablers even want to process this payment. Do they want to take this on? And does Alice want the payment? And whether Alice wants the payment, that really depends on the jurisdiction. So in some countries, when you do a real-time transfer, it just pops up in your account. In others, you have to actually approve it. In this scenario, we have enabled so that the recipient or the payee of a transfer actually needs to approve it. So in step number 3, the central bank basically asks, is there any access enabler here that's willing to take this? And we actually have 2 access enablers, and they will both say, yeah, we'll gladly process this on behalf of Alice. And then they check with Alice, well, are you good to take this? Yeah, I'm good to take it. And that goes back to the access enabler. Access enabler tells the central bank in step number 5, okay, all good, I'll take it. Alice is good to go, and you can now transfer the funds. So the CBDC app at the central bank connects to the ledger, say, okay, move money from Bob to Alice. Right. A few steps to complete a transfer. So let's look at our friends again, Alice and Bob. And we're going to start by, just to verify here, right? We're going into Bob's GeekSafe account. And we are going to first address our friend Alice. Strangely enough, they are both employees with M10. We find Alice. And we say, okay, we're going to send money to Alice, and we're going to send her 100 shekels, and thanks for dinner. Okay, you see now that there is a pending state on Alice's side, and you have an accept reject button on Bob's side. And let me show both apps for Bob, right? You have GeekSafe on the left, and then if we look at MoneyPot, you have the exact same request, right? So it's up to Alice which access enabler app she wants to use to accept this payment. But we're going to use, in this demo, we use MoneyPot, so Alice will gladly accept the 100 shekels. The transaction is settled. And if we now go over to our access enabler and take a look at the Payments tab, if things went well, and it did, things did go well. So we see the payment there. There's a transaction, right? It's not anonymous. It's known to the access enabler. If we look at the central bank view and filter for any transactions, you see, okay, there is the 100 shekels, but again, of course, they don't know. They just know that it was processed by GeekSafe. That's all they know, not who GeekSafe's customers were. All right, so in short, so let's just revisit that flow once more, real quick. So Bob instructs his access enabler to transfer funds to Alice. The access enabler forwards a request to the central bank. Central bank goes to Alice access enabler. They approve it. And if all is good, money has moved. Now, what's important is that effectively what we've done is we have moved value. We moved value from Bob's CBDC wallet to Alice's CBDC wallet. The red arrow is actually the most important arrow in this diagram, right? All the other arrows are just how you get to that point. Okay, so some of you may wonder, like, what happens if the payer, in this case, Bob, didn't have enough CBDC to complete the transfer? Would it fail, or what would actually happen? Or what would happen to a payees, like if Alice had received these funds, but it would exceed her transfer limit, or holding limit, sorry, right? What would happen then? Would the transaction fail? That would be poor customer experience or user experience. But fear not, we have solutions for both cases, right? Surprise, surprise. So in the first case, where the payer has insufficient CBDC for a transfer, we actually combine the transfer flow with the funding process. Remember, what the first part I showed was how you fund your CBDC account, right? And if we look at step 2 in this process, the transfer process, that's where the access enabler will check for sufficient funds. So if that check fails, it will perform a funding request. And for this to be automated, it basically requires that the payer has linked their account to the funding institution. So it would be tough for Bob to do this because he wouldn't have to run up to an ATM, push money into the ATM in order to complete the transfer. We're not going to do that. What we're going to do is we're going to be a little mean to Bob because we're going to link an account to him whether he wants it or not. So we're going to link a payment methods just so we can properly demonstrate this. So now he does have a checking account, as you see, and he has a CBDC account. Oops, sorry. Thank you. For the second case, where the payee's account limit would be exceeded, we're combining the process of receiving a payment with the defunding process. I actually didn't show you the diagram, and I just said it's kind of the reverse of the funding process. And this is what we call the waterfall. So imagine the excess CBDC just flowing over into the payee's deposit account, right? And so we do have a very pretty diagram for that. So during an inbound transfer, when a payee's access enabler, so this guy here, right, responds to the central bank that they will process the payment, the access enabler will provide some critical information to the central bank. It will namely tell the central bank whose funding institution the Alice or Bob or who the user is banking with, essentially, right? If the central bank has that information, and it's not stored anywhere, it's just with that one transaction, right? If the when the central bank receives that information, it can then instruct a ledger to automatically defund from the Alice's account, and then it sort of interacts with the funding institution. It tells the funding institution, hey, we have defunded, X shekels for one of your customers. You should credit them on the deposit side, right? Okay, so let's see if we can make this happen as well. So we have linked Bob's account, even though he's not so happy about it. Now we're going to do some math here. Okay, so we need to remember some numbers. You see that Bob on the right side here, he has 400 shekels in his CBDC account, and Alice has, let's use GeekSave, she has 2,100 shekel in her account. So what we will do is we're going to say, well, Bob actually needs to pay rent, so he's going to pay Alice. Sorry, I need to pick it up so I can type here. Oops, that's not going to work at all. Okay, so we're going to actually, well, what are we going to do here? Let's turn this around, actually. Let's turn this around. We're going to have Bob request money from Alice instead. That's more fun. So you see we have two buttons here. I used the send button previously, but this time we're going to look at the request. And this is what Daniel spoke about in terms of programmability. I'll make a comment on it later, how we actually implemented this. But we are going to say, we're going to request money from Alice, and let's do big money. Okay, so 5,000 shekels, and this is for a rent payment. Let me just go back here. And where did that go? Oh, it is here, trust me. We have a pending request, right? So on Alice's side, there is a pending request, and it says, Bob wants 5,000 shekel for rent. And reluctantly, Alice will pay this. And if we go back to the home screen, you see that it's all cleared out. So let's figure out what these numbers now mean here, right? It was all, I promise you, he did receive his 5,000 shekels, right? So the starting point for Bob was 400 shekel, and then he requested 5,000 shekel. But why does he only have 5,000 shekel? Why doesn't he have 5,400 shekel in his CBDC account? Well, what happened was that 400 shekel were defunded, right? Because his limit was exceeded. Remember, we set it at 5,000 shekel. Suddenly he had 5,400 shekel. Oh, you can't do that. So the central bank defunded 400 shekel from his account. On Alice's side, you may wonder, how was she able to pay 5,000 shekel when she only had, I think, was 2,100, or already forgot the number. I think she had 2,100 shekels. So what happened was that you see the second row, right, it says you funded, it automatically topped up her CBDC account. So the access enabler connected to Alice's funding institution say, hey, we need another 2,900 shekels so we can complete this transfer. Goes to the central bank, it funds the account, comes back to the access enabler and say, okay, you're good to go, and then the transfer went on. So we had essentially three actions happening. We did an RTP with a top-up from the payer and a waterfall from the payee side. And there is perhaps one thing more to comment on here. RTP, or request to pay, is not particularly innovative in itself. Many payment schemes offer request to pay. What's unique is really about how we implemented it in Sela. And it was using programmability. Remember Daniel's overview, automation, conditionality, and composability. We used the automation component to automate a payment when a request is approved, essentially. So this was kind of a first step in terms of programmability. There's a lot more to explore in this area. And that essentially concludes the demo part of today's presentation. However, one more thing. You remember Steve Jobs? Right? So I think Daniel mentioned we have some interesting Sela gifts or souvenirs, I think they're called. They're there. Okay, and so let me do this here. We have goodies for you, right? So you can actually install the app on your iPhone or your Android device on the App Store, or it's called M10 Wallet. And I would have loved to call it GeekSave, but for those who are familiar with publishing apps in the App Store, that was just not an option. So we have to call it the M10 Wallet. So feel free to download this. What I want to do before we go out here and purchase these fantastic souvenirs with your soon newly acquired CBDC. And please donate lots of CBDC for this purpose. I wanted to just give you a really quick overview how you do this, right? So I'm going to use Bob, and I will just clear this out. We're going to register as a new user, so you see the steps. Okay? So if once you have downloaded the app, which apparently was texted to you all, and you saw it on the screen, I'll switch back if you weren't able to scan the code. You should get started, and it's essentially the same on, this is just a biometrics, it's the same on Android and iOS. So you have this registration screen. So I will register as Martin. Oops. Yeah, no, iPhone is M10 Wallet, Android is GeekSave.
$1,000, sorry, TASE 1,000 is the Wi-Fi password.
Okay, can I get your attention just for one moment, because this is important to when you register, right? The national ID, you can put in whatever you want. We're not tracking anyone, right? When you go to the password, just make sure it's a 10 digit or 10 character long, and there's a capital letter. And then once you are registered, right, you saw this, you activate the CBDC account, but you need CBDC in your wallet, so you link to M10 Bank, and you can just call this anything. You just tap in the account number, it autofills, and you're good. Okay, that's it. You should be able to do the rest. Otherwise, come up to me and ask for questions. If you want to send CBDC to each other, you can also pull up the QR code, and then you can address each other. But we'll do that later. Sorry? Yeah, once you fund your CBDC account, right, you have... Oh, lots. 1,000 shekels. 2,000 shekels. 1,000 shekels. All right, thank you. Yes. It is out there. Oh.
Okay, so afterwards, when we're done, you'll be able to go out to the booth. Sorry, when we're done, you'll be able to go out to the booth, and you'll see your transactions on the dashboard outside on the booth. And of course, we're selling Sela USBs for the cheap price of 1,000 shekels each. So, okay. So sorry, we're just going to wrap it up. Just one more minute. So I'm just going to. So if you can we go back to the slides?
Yes.
If that's okay. All right, so let's summarize. Thank you, Martin, for the wonderful demo. It's always nerve-wracking giving an actual demo of technology. Everything can go wrong, so now I feel like we can all breathe again. Thank you very much. So I know you've been sitting in your seats for a long time. I'm only going to take 2 or 3 minutes to summarize. And honestly, if you haven't registered anything until now and you feel totally confused, nothing matters. Just leave here with a couple of kind of clear points, and it's presented in this summary here. So until now, nothing really mattered. Let's just bring it back home with the summary and the findings. So in Sela, we built a prototype that shows the following. It shows that a central bank CBDC-operated ledger. It shows access enablers that don't hold the CBDC themselves. It shows that funding institutions support interoperability of money between deposits and cash and CBDC. It shows that end users can actually hold their CBDC funds, and we've looked at the kind of the universal legal principles for that. And we've shown that cybersecurity can be supported by preventative architecture measures. So our findings, in conclusion, 2 points. Increased access, competition, and innovation can be achieved through lower barriers of entry and a new type of intermediary, this thing that we're calling an access enabler. And this access enabler can, from a technical feasibility standpoint, never touch the funds at any point of transaction, funding, defunding, etc. And the second point is that a retail CBDC system promoting access does not necessarily come at the cost of greater cybersecurity risk. So if we haven't bored you to death already and you feel like downloading the entire report, it was just published today. Feel free to scan the QR code, download the report, and we'd love to hear more from you. And we look forward to keeping this work going in the future. So thank you very much for listening, and I'll pass it back to Adina.
Thank you to the Sela project team. That was fascinating. If you have not yet downloaded the app, please do so, as you don't want to miss out on getting the cool project souvenir. You can buy the souvenir with Sela CBDCs on your app during the coffee break or at the end of the conference.